US-China trade tensions eased last week, triggering a rip higher in risk assets and taking Bitcoin just shy of the all-time highs. High Ethereum volatility remains as it rallies 50% in a matter of days, bringing call skew back across the curve. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT in the studio, and we've got no sun. We've got no sun and skyscrapers.
I know, it's a little bit of a come down, isn't it? After Dubai.
yeah. We met a lot of people, huh? Had some great conversations.
Oh, it was amazing. I mean, I've enjoyed sort of watching the footage over the last sort of couple of weeks. Some great conversations.
Mm-hmm. But quite a bit's happened since we were out there, right?
Yeah, well, I mean, I was just thinking, last time we were sat here, it was like the world was ending, right? You know, equities were getting smashed, crypto was getting smashed.
Yeah, we're back above 100K.
Back above 100K.
Back.
Yeah, and it's been quite a sharp turnaround and everything. I mean, we've discussed that the idea that, you know, Trump was front loading a lot of the bad news. It definitely feels that way. Whether it was the Trump put and that it just got too painful, the path they were going down. But I kind of feel this was the plan all along to, you know, just bring people to the negotiating table. So obviously the China...
the de-escalation with China
was huge. And I think everyone realised that was really what this was all about, probably. Mm-hmm. So I think what's interesting to me is we're now... If you think back to April, we were pricing some pretty extreme scenarios. Like we had priced like COVID level stress, like global financial crisis level stress, which felt massively overblown given what was going on. But I guess that was the level of uncertainty.
But the irony is, bond yields are back to those levels.
Yeah.
Equities have rallied, crypto's rallied, right? But bonds are still there. Doesn't that make us nervous?
Yeah, and there's a couple of interesting things at the moment. So. I think firstly, we have to say that there's been two huge pivots, right? The tariff pivot is massive. And I say we've gone from a market that had to price these extreme tail risk scenarios and this disruption to global trade to now having to sort of price that out. The other big story and thematic that obviously we all got excited around, you know, Besant saying they want to reduce fiscal deficits down to 3% from the 7%, Doge going in there and, you know, trying to cut costs.
Yeah, and you always said it. You said it wasn't going to touch the sides.
It wasn't going to touch the sides. And there's still no obvious, you know, nothing stops this train. Lynn Alden, I think she coined that phrase, but very true. You know, like it's really difficult for these debt-driven, fiat-based economies to grow significantly without just more debt. And it's not clear how you get out of that without, you know, a huge sort of slowdown, recession. And I think the fear that markets were pricing in early April was that Scott Bessent and Trump were serious about,
they didn't care about
addressing that. We don't care about growth. We don't care about stocks. We're going to get this thing under control. They've done a complete 180 on that as well. So, I mean, right now we've got Trump.
All their billionaire mates have said, "What the hell are you doing?" Right?
Yeah, and I always say it's the Mike Tyson quote, right? You know, everyone's got a plan until they get punched in the face. And I think in April they got punched in the face.
That's a good analogy. Yeah.
And so just looking at what's Trump calling it, his big beautiful tax plan.
Beautiful bill.
Yeah, without sort of boring viewers with like the details around that. I think the kind of big takeaway is like over the next decade, it's going to reduce tax revenues by around $4 trillion, and they're going to cut spending by around $1.5 trillion. So you're talking about a $2.5-ish trillion increase in the deficit over a decade. That's not taken into account just with high yields and how that's going to drive everything. So I think bond yields have been, we've had to re-rate growth, but I think we're seeing this rise in term premium where again people starting to worry about debt sustainability. Then Moody's have kind of piled in with the downgrade as well.
Yeah, that was this weekend. Right?
Yeah, but the interesting thing with it is it's not impacting risk, and in fact I think the kind of macro playbook that I've now got in my head is back to very much a Biden era type playbook of fiscal dominance, which is going to mean that bonds are going to continue under pressure, but growth probably sort of sustains, probably means that Fed are probably a bit more sidelined than we think. But all these deficits are being monetized. So growth sustains, liquidity will remain quite high, which means equities are going to perform and Bitcoin and crypto is going to perform.
What about all this debt that they've got to roll over later this year? That's what they wanted yields lower for, right? How are they going to get yields lower?
Yeah, but it'll all end up on the central bank balance sheet. So we're gonna see a lot of central bank tricks and financial repression. So ultimately, I think it all leads again. And you've seen Japan do it over the years and still do it.
Form of yield curve control.
Form of yield curve control. I mean, Besant's already stepped up like the treasury buybacks and all this stuff. Mm-hmm. That there'll be some sort of monetary operation from the Fed that it'll be not QE as I call it, but it'll look and feel very much like QE or yield curve control. But they just won't call it that.
But the headlines will be, "Oh, we're not cutting rates. So look, we're being responsible. Yeah. We're trying to control inflation." But then on the through the back door, they're kind of making sure that the bond yields don't unanchor, right?
Yeah, they're going to. I mean, they've already talked about, which I think is pretty much guaranteed to happen, about the supplementary leverage ratio, the SLR.
So making banks buy the bonds.
Yeah. So basically exempting treasuries from that calculation, which means banks don't have to hold capital against holding bonds. So the banks will incentivize to hold bonds. I mean, there's lots of things they could do. They could start to make insurance companies have to hold a certain amount of treasuries. Mm-hmm. I think you get all these things to make sure the demand's there, and ultimately the Fed will end up buying it. I mean, interesting. Like I always think, like essentially the Bank of Japan own about 50% of their domestic bond market. I think the ECB own around 35-ish%. And the Fed are around like 20% or something of their bond market. They've got a lot of room to bring a lot of that onto the balance sheet.
Japan, they've had a bit of a debacle last night in the auction. They had a bond auction, apparently worst auction since 1987.
Yeah.
Yields spiked quite a lot, right?
Yeah. And we're seeing, and I think this is one of the big stories that's probably not getting enough coverage. This global, and certainly in developed markets, like the long end of the bond markets, yields are going up everywhere. It's not just the US. Like US 30-year yields now back above 5%. I think like long dated Japanese yields are hitting record highs. Mm-hmm. Germany, like it's happening everywhere. Australia, mm-hmm. I think Canada's probably one of the only places that isn't. But it's not being driven by growth or inflation fears or rate expectations. It's purely a rising term premium, which is investors saying that we're questioning debt sustainability and we demand higher yields to hold this debt. Now, again, the thing for me is, and the interesting thing, it's not impacting equities or risk. And I think the reason it's not is because actually we're rotating out of debt now, right? So, and I think everyone's starting to realize this all ends in financial repression. Like the Fed, everyone else are going to be printing and doing some form of yield curve control, whether they dress it up as, market stability, whatever they're going to call it, it all ends in the same way. And I think, and ultimately what it means we're going to just see again a ton of liquidity just pumped into this market.
And that's what stocks are pricing in.
Stocks are pricing it in. Crypto. Gold's been pricing it in, and now Bitcoin's pricing it in.
So, we probably should talk a bit about crypto. So we've talked a lot on the macro, right? But so we're almost back through the highs.
Yeah.
But Bitcoin, to me, just as an observer, looks to have lost its sort of momentum a bit relative to the alts, right? We had a massive rip in Ethereum, which kind of caught a lot of people off guard. I think a lot of people were using Ethereum as a short leg to other trades, right? Because it had just been a dog for so long. They obviously got carted out, right? So, but there seems to be a bit of a pullback in Bitcoin dominance happening.
Yes.
Is that something you think continues? Is that persistent, or are we better off just sticking with the old dog? Bitcoin?
Yeah, I do, and the reason I think that's happening is because of this explosion in liquidity that we're seeing. And I mean, Bitcoin's, the crypto generally is like liquidity junkie, right? And Bitcoin is, but particularly the alts. And what we've seen we've spoken before about this explosion in M2, like global monetary growth. But also one of the interesting things, which something I've spoken about with the weaker dollar, what the weaker dollar's done is it's enabled this explosion in liquidity, because obviously you've seen China have been able to cut rates and ease. And then what you find is when all these emerging market currencies that start to actually strengthen, they want to slow that strengthening. And to do that, they obviously have to intervene by essentially buying up dollars, and they're increasing their FX reserves, which increases the money supply. And so the weaker dollar is feeding this like virtuous cycle of an explosion in liquidity. Mm-hmm. And I think you're seeing like the alt space pick up on that. And typically like it comes in with a lag of 2 to 3 months. So I think we've got a few months ahead of us of a proper alt season, which we haven't really had. Mm-hmm. But I think we're starting to see that. And maybe that's why ETH has started to turn. We did have the Pectra upgrade and stuff like that. So I think the narrative has shifted a little bit around Ethereum, and sentiment was so beaten up there, right?
Yeah.
But I actually think that's a signal of we're seeing this sort of broadening out from what's been a pure Bitcoin, dominance move over the last, 2 years really, to now seeing like the alts start to really sort of get some momentum.
Yeah, because we, when we were in Dubai, we talked to quite a lot of options market makers, right? And everyone was looking at Bitcoin vol saying it's crazy cheap, right? But the truth is, it's not really realizing. Like you've got vol in the kind of high 30s now in the front end of the curve, and yet it's realizing more like low 30s. Right?
Yeah.
Whereas you look at ETH and it's realizing double. Right, the realized spread is like 30 to 40 vol points. It's massive, and so the implied spread's at about 30 points Ethereum over in the front. And as you go to the middle of the curve, it's more like 15 to 20 vols. But Ethereum's definitely the one that has kept the higher volatility levels, and the market is certainly pricing that it's going to continue that way. Right, it's the higher beta asset, and whether it's to the downside or the upside, it's the thing that's going to move more. And Bitcoin's just like vol is just grinding lower and lower and lower. It's almost like Bitcoin vol is like the funding leg for everything else. People want to own vol in these alts, but yeah, they'll sell vol in Bitcoin as to finance it, basically.
Yeah, it's interesting. And as well, we do keep seeing, like, we get like, particularly in Bitcoin, we get these really sharp, quick moves. And then we chop in a range for a bit.
It falls asleep, yeah.
Yeah, before the next one. So I'm guessing for you vol traders, it's
frustrating, I'd say.
And difficult, right? How do you trade that?
Yeah, it's tough. I mean, I haven't been too active, I've been doing my sort of more systematic strategies and stuff. I've got some I always like having some call ratios on generally if I'm bullish. So they're kind of ticking along in May. On the hedged portfolio side, it did well. On the big drawdown down to 70K, my drawdown in that book was like 7% relative to a Bitcoin drawdown of more than 20%. But then obviously on the rally back, because you're selling calls to finance some of your hedges, you don't make as much on the way back. So you participate in the upside, but you don't participate fully, right?
Yeah.
But if it's a really slow grind up, then you actually participate fully as well, right? But yeah, in terms of tactical trading, not clear and not really sure what to do here, because vol feels too cheap, that you don't really want to be massively short on a 40 vol, but owning it isn't an easy way to make money.
It's going to bleed to death by owning it.
Yeah.
Yeah, it's interesting. And it feels like we probably need to break the highs in Bitcoin, right, for things to really sort of pick up.
I think if we break 110K, there might be a bit of a pop in vol. I think we talked about this with some of the guys as well in Dubai, where we were like, what level of spot do we need to break for vol to react on the upside, right? Yeah. Because that's what Bitcoin tends to do. Vol tends to spike when it goes higher, but it's been a bit orderly up till now because we haven't made new highs yet. But if we go above 110, you got to think these sort of mid-dated vols that are in the 40s, they could pop maybe 10, 15 points if the move is actually quite violent, right? But what do you think, like in terms of realistic upside for this thing to have over the summer? Because I think with the amount of institutions in there and stuff now, and all the call selling that goes on and stuff, I don't think it goes to 150K in like a short order, like in a parabolic fashion. But what do you think?
Yeah, I don't know. Like I still have like a feeling of like early 2021, and when we finally kind of broke 20K, like we moved to 60K really quickly, and it just kind of, for me, has that feel that actually like 150 is going to be a magnet. We get through that 110,
But I felt
then-
like when it broke 100K the first time round,
Yeah.
if it was going to behave like that, I would have thought that's when it would have done it. It's taken out 100 off to the races, right?
Yeah.
It didn't really happen. We pushed on a little bit and then we chopped and we had all this consolidation. So why I don't know that 110K or whatever is a big enough psychological level to suck everyone in now, you know?
Yeah.
And the inflows, we've been seeing the inflows coming in on the ETFs consistently. It's not like everyone's waiting for a level to break and then it will be inflows. There's been consistent inflows. MicroStrategy has been buying the hell out of it still, right?
Yeah.
So I just feel like that's just the thing that supported the market and will continue to support the market. But I don't think you get this retail frenzy that gets triggered because retail don't care about Bitcoin. They care about like memes and the high octane stuff, you know?
Yeah, but that, like price is narrative often and you start to break and everyone's chatting about it and then even like institutional guys are piling into it. Again, everyone's always waiting for the pullback, right? And then all of a sudden you're forced to chase it. The other thing that I think is quite interesting is like when Bitcoin pricing gold, when the Bitcoin gold level starts to, like, we broke out of a trend. And in fact, we did that like, you know, we had the August sell-off and everything. And then it was a bit of a trigger for me that like Bitcoin started to gather some momentum when Bitcoin gold started to break higher. And obviously, and we peaked in like mid-December, and then we've been selling off ever since. But we've now, obviously, in the last few weeks, sort of turned higher again. We've broken like trend levels. But if the Bitcoin gold ratio gets back to where we were mid-December, that would put Bitcoin, if I remember, I did this last week, that would put Bitcoin at around 135K, given where gold is today.
Right.
So it kind of feels reasonable to think that we might get back to that level. And I don't think gold's going anywhere like anytime soon.
Yeah, I mean, it's consolidating a bit. It obviously touched like 3,500 and went back to around 32 where it is now.
Yeah.
But you've got this like geopolitical easing, not just the trade war, but also talking about Russia, Ukraine, ceasefire and potential end to the war there.
Yeah.
So there's a bit of geopolitical risk premium in gold that might need to get
Starts
priced
to leak out. Yeah.
over the next month or two, right?
Yeah, but then as that risk premium leaks out, it probably leaks into Bitcoin, right? And I say I've described, which people give me a lot of shit for on Twitter about, it's heads I win, tails you lose type thing. But we do go from this, the far left tail of like the world's blowing up, and Bitcoin held in really well, right? As that hedge against the disruption to a dollar-based financial system, to then, all right, we're pricing out risk premium, and then we go to the right tail where we catch up with liquidity and all this stuff. And there's a lot of really positive risk catalysts out there at the moment. And the other thing as well, like generally with risk, I mean, like I think in April we saw like record low positioning in equities. And that's all being grossed up now. I think fund managers are still like holding record underweights, and the moves happen so quick they're being caught offside. But as I've spoken about before, when you get a de-risking event, right, it becomes, I talk about these mechanical waves of de-risking, because essentially it's insensitive to price. The models just say we've had a big VAR shock. We have to take down gross exposures, right? So not rotating. Now it's the opposite. Now it's like each day the models are triggered, right? We need to re-risk up higher.
Because vol's lower, you can afford to take more.
So and I felt this, and I wrote about this over the weekend because obviously we had the debt downgrade. I said we're going to think back to the last downgrade, which I think was Fitch downgrade in 23, and the equity actually sold off around 10% over the course of a month or so. Although that did also come at a time when they were rebuilding the TGA and like, there was a huge amount of T-bill issuance, which was draining liquidity out of the market. So I just think that it was a bit coincidental. But I was like, I expect we continue to see waves of equity buying as these funds that they're not going to look at where equities are. It's just right and do it very systematically, very mechanically. So I think you've got to see a lot of like grossing up of risk. I think equities are going to perform well. And there's a lot of people having to chase performance. So then we go back to the right tail. And at the same time, I say we've got this liquidity explosion that the weaker dollar's facilitating and continues to facilitate. So, and it's hugely, in a dollar-based world, it's hugely like reflexively stimulative for not just the global economy, but for risk. So I think we're going to see equities at record highs like within the next sort of month or so. Like NASDAQ, S&P, I think Bitcoin feels like it wants to look at new highs this week, right?
Yeah, I mean,
and then I think then we have like a blow off top scenario sort of through the summer, and then we have to rethink about it from there. But
yeah, hard to get in the way of the rally right now. Definitely looks like a pain trade in equities.
Yeah.
To me, it doesn't feel quite as much of a pain trade in crypto, but I am sympathetic to the idea that if we were to take out the highs, that probably does suck in a bit more money and you get a bit more vol on the upside in Bitcoin.
Yeah, the other thing as well for Bitcoin itself is obviously we've spoken like the Trump administration, what they're doing around Bitcoin and crypto is massive, right?
Yeah.
And it's been kind of it ended up sort of falling into the background a little bit given all the other crazy stuff Trump's been doing and it's just a broad risk off trade. But again, like we're seeing more and more companies now start to use the MicroStrategy sort of playbook in terms of, having a Bitcoin treasury. So we see more and more corporates start to come into the space doing that.
We haven't talked about Coinbase.
Yes, yeah.
I mean, the stock's up 30% in a week.
Yeah.
And I mean, it's probably more because of the fact that they're going into the S&P.
Yeah.
But also, they are getting involved in the options space now.
They are, yes. Yeah.
You might see a change in the logo here at some point.
Yeah, I did actually hear the rumor that I've heard around that deal was that Coinbase mainly wanted to buy Deribit for this podcast. But
Of course they did. Of course they did, though.
But you know what? I mean, obviously another huge moment for the industry. Like, huge like M&A activity is just really hot right now in this space.
But it's super exciting being in the option space and then that happening, right? Because we're basically saying, okay, we're going to open up the native crypto option space to the US market now.
Yeah.
Right. And we know how big the US market is in terms of single stocks and index options. So imagine that type of activity in crypto options. I mean, the future looks bright for sure. Right?
Yeah, it's huge. And I say, I just feel like we're still waiting on like a regulatory framework to come out of the US. Right. So again, everyone's now starting to build and wants to come into the space. We're not really going to get that until we actually get clarity on that, which is probably a good few months away. There sounds like the Genius Act around stablecoins, that seems to be gaining traction. So I think that's going to be a big moment. I assume that gets passed and we get that bill through, which again is going to be another big moment. I mean, it looks like stablecoin issuers and largely Tether is probably going to be it's already one of the biggest holders of treasuries, but it's quite possibly and strategically it makes a lot of sense now given what we've talked about around people questioning debt sustainability and stuff in the US. Who's going to own the treasuries? Well, you know what, they're less incentivized more of these stablecoin
that makes a lot of sense
firms to own it, so their role is becoming strategically far more important for the US, which is why I think we'll see the Genius Act all get passed. And then, you got to think the growth and explosion of stablecoins as that, continues to go. It's just going to feed into this thing. Also as well, who is it? I should credit someone with it. I can't think. Someone on Twitter sort of made a really good point around, how positive that for ETH. Because most of the stablecoin issuance that still happens on ETH, and then what does that mean for DeFi and what have you? So that's going to be really interesting.
This run on ETH might have some legs, basically.
Yeah, and like we say, right, everything's narratives. Everything, like whether it's traditional finance or crypto, narratives, everything. And you're just starting to see that underlying narrative for ETH sort of term. And by the way, I've been wrong on ETH for about a year, so I keep expecting it to take off. But with the Petra upgrade, you get this stablecoin legislation through, and ETH is going to be a really sort of big beneficiary of that. It's really interesting.
Still lots of room for ETH to catch up, right? It's been underperforming for so long now that if it really does take the baton, and my God, it certainly did last month, but if it takes the baton, there's a long way to go. And I guess the vol market's kind of telling you, be careful on that one, because that vol spread is at the highs, right? Pretty much. So
yeah. Again, what do you do with that? Because you won't want to short that spread, right?
Yeah, I mean, the easiest trade right now, given where ETH vols are, is to just call overwrite. So own ETH and call overwrite it, basically, right? Because you're getting quite a healthy premium for selling ETH vol at these levels, but you need to own the underlying to be able to call overwrite.
Yeah.
Right. So that's one trade I think will become more and more popular as people, because if people don't own ETH so much, they've got nothing to overwrite against. But if people are confident enough owning it and don't think that their long is just going to kill them because it's just trending lower and lower and lower, they're comfortable owning it. And if they own it, they're happy to earn some yield off that, basically. Yeah. All right, guys, we're probably going to call it a day there. Remember, like and subscribe, and we will be back next week with a guest. So catch you next week. Cheers.